Welcome everybody to 40 Finance live stream. Today, we, as usual, will do some live Q&A. As always, I thought I'd kick off with some of my own thoughts. Looking at the market, we have had another strong run. So if you kind of kick things off here with the QQQ, which is obviously, if you've watched me at all, you know that's one of my favorites. The QQQ, aka Top 100 of NASDAQ, is been up. So we had a little bit of a down day last week on June 11th, actually 7 days ago today. And it's already bouncing back. So not the QQQ specifically, this is the stock market in general. We've had the first couple dips come through as the market was going up, and every time that it goes down just a little bit and I sort of get excited about maybe saving some money on my long-term investments, it just goes right back up again. And the news this week seems to support that there's not much end in sight when it comes to federal assistance. There's more loans, more stimulus, all those things that everybody knows about are coming out. So, if you're waiting around for the stock market to crash at least a little bit like I am, then you have to be incredibly patient right now. You see, let's find Monday here. Monday, we were at 234 on QQQ, and it's already up $10 heading into Thursday. So, things just keep moving along. The next big news, at least in my camp, which I recently did a video on, was that Turtle Beach, which is a stock that I've been in since either late 2018 or 2019. Basically, I got in right after the full Fortnite boom and paid too much at the time, $20+ a share. And if we look at this chart, actually, let's get a bigger one here. It's been down, right? It's been down since I've gotten in, and but lately it has come back. So I think this is the true Fortnite boom on July 30th of 2018. The stock was up as high as 32. I think I got in around 20 because I saw it fall from a peak all the way down to the $20 range. And ever since then, I've been buying the dips for way too long. And now they recently came out with some additional revenue guidance. And basically, you can see this is the past month. They came out and it wasn't their best quarter ever, but it was a quarter that was better than that Fortnite boom period. And so, the lockdown and everything virus has been a benefactor for Turtle Beach, and sort of what we predicted, or I predicted, would happen. And it wasn't really brain surgery. The surprising thing, though, was how long it took for the stock to really show those signs. So I was lucky at my cost basis to buy a couple little bit down here in the $5 and $6 range. Brought my cost basis down to $10.50. Now, after you can see where the earnings preview came out, that would have been on 6/15, and it's jumped about $3. So I'm already in the money, which is good. I'm personally targeting around $16, $17 to get out at my cost basis. However, I do think that there's still more run in this stock if you want to take a chance on it. And I would just encourage you to look at the fundamentals and understand that the new consoles are coming out. When I say new consoles, I mean PlayStation, Xbox. There's also been a huge boom in PC and laptop gaming. And if you just look at Turtle Beach's fundamentals, they have historically done well with a low PE ratio. You see it's up here a little bit on Yahoo at 16. I don't know how real that is because it's always fluctuated in Yahoo, but you see historically they've been under 10. And from the standpoint of revenue over the last 12 months, which doesn't include the quarter that's about to end, 225 million over the last 12 months. This quarter that they'll report on in August, they had 75 million. So pretty impressive run there in this past quarter. I expect that Q3 and Q4 will also be big when these new consoles come out. They got $8 million in cash, total debt load of almost $2 million. That went up. They had eliminated all long-term debt, but they did have to invest in some infrastructure and some employees because they got so blasted by Corona as far as demand. So they had to really ramp up production and do a lot of short-term fixes to get their stuff out, and it worked. And so anyway, I'm targeting 20 by the end of Q3. That's my guess, and doesn't mean it'll happen. I've certainly been wrong before. But so if you can get in at 14 or under 14, and you're looking for a stock that maybe in 6 months, is it 6 months? Less than 6 months, maybe 4 or 5 months, could be at 20. I honestly think Turtle Beach will do that. So that was how I was going to kick things off here. And then the last item here, and then we can get into questions if anybody has any, was Visa. That's Visa I'm a big fan of. And this would be for a 100% long-term play of at least 3 to 5 years. But if you look at Visa, what's interesting, all the things that have went up in the world, in the stock market world, Visa is still trading way behind the peak that it had on February 19th. So 213. And not that it's a huge amount of money, but what is that? 20 some dollars. It's still trading there. So I'm buying Visa little bits at a time, 5 to 10 shares at a time to build up my position. I think I'm only at 15 shares, but it's a stock I believe in for the long term. And frankly, in this world of overpriced stocks, I think that Visa is not necessarily the best deal you're ever going to see. However, it is still way below some of the peaks that it has already hit. All right. Welcome everybody who's joining the stream. Feel free to post questions. It's the number one reason I'm on here, to catch up with everybody, try to give you my 2 cents on what's going on. Let's see what's going on in the market right now. You have the S&P is about flat for the day. Dow 30 down just a little bit. NASDAQ barely up. So basically a flat day, right? Basically a flat day. Not a lot there. But I did see that with Powell, who's been busy this past 7 days. He's been very busy. He has been taking a lot of questions. They've had a recent Fed committee meeting that they've come out, and he has been all over the ice. He has been very adamant about the level of support that they are going to be offering to the country. And I think Congress they've asked him a lot of questions this week. And I really like this guy because he kind of comes back and says, hey, here's what we can do in my committee, right? We can we can affect interest rates. We can buy bonds, which is something they typically haven't done in the past. he can help with debt, right? They can make policy changes to extend debt deadlines. But at the end of the day, Congress is the one that makes the fiscal policy, right? Or they're the ones that give away money, so to speak. So, I don't know what Powell's got left in his toolbox. I don't think he has any brand new ideas. I mean, folks are talking about, maybe that the government buys stocks, and I'd be sort of surprised, I guess, if they did that. But the fact that he's buying corporate bonds is a real safe haven for companies that are in trouble, right? Because they sell those bonds in order to raise cash to keep their companies going. So if you think about a restaurant stock or anyone who's been affected, hotels, whatever, they would sell bond offerings to raise money with some sort of interest rate attached to them, and the government is buying those, and that helps them. The companies get basically the cash, and even though it's a contract to pay back that money, it gives them that immediate liquidity, which you hear everyone talking about, and allows them to sort of go about their business. So that's that. My take with the Fed right now is the bond purchasing. We know 0% interest rates aren't going away anytime soon. We know that bond purchasing is very unlikely to go down soon. So what does that mean for the stock market? I think it probably means for the average Joe like me that you could conceivably take on riskier companies if you wanted to. And I don't mean Hertz, by the way, but you could take on companies with higher debt loads that you think are essential to American operations. Boeing comes to mind, airlines likely come to mind for me, and that those companies would be safe from traditional bankruptcy. So however you see fit there, it is not going to impact leveraged upstarts like Shopify, as I'm sort of looking at my list here. Shopify, Neo, which is not even an American company. They wouldn't qualify anyway. Square, I'm about to do a Square stock market review that will come out, I think, this weekend is the way it's trending. But those kind of companies would not probably apply to the type of bonds that the Fed's purchasing. I think they would more likely be inclined to get traditional American companies. IBM probably doesn't need it, but that's just one to sort of pick out. All right. Finally got a few questions on the board, so I am going to pick off the wrong one. And let's start off with Larry. Do you like QQQ better than the total stock market? I absolutely do, 100%. And I think it was about a month ago, I did a video on this, Larry. If you go back and look, it says something, it's something like, don't buy the SPY, right? The S&P 500 index, purchase the QQQ instead. And I gave sort of my rationale why. And the short version, though, Larry, is that you get so many more losers with these large index funds. You get, and I'm not saying QQQ can't lose, because it can, but it has, the ratio of winners to losers is so much better with the QQQ, whereas the broader stock market indexes, even the S&P 500, man, I mean, there's a lot of losers in there. It sounds great, top 500, but in this top-heavy environment, the gee whiz, the bottom 250, I'd have to look at a chart to see who's on there right now, but it could be people in utter decline, if that makes any sense. Hi, Pratik. Let's see what you got today. Little general question. Who is your role model, or what motivates you to do investing? Sure. So I don't know if I have like a investing role model, because like just one person that whatever they do, I'm aligned with 110%. I like to listen to a lot of different people. I like to read. And the internet is, one of the best places for that. So I get a lot of opinions, including something as silly as if you've ever seen the website StockTwits, goofy, like a lot of passionate fans on there and a lot of pomp and circumstance, if you will. But I like to get everybody's opinion. What's the Seeking Alpha, where you just have, there's no difference between half the people on Seeking Alpha and you and me, right? They're just making up their opinions and trying to support it. That's a great place to get different perspectives. As far as me personally, motivation is my family, right? And long-term wealth. I am not a millionaire yet here right now, but I'm just growing, and I believe in the stock market, and I believe in capitalism. I also have some interest in real estate outside of my own home. So it's just about accumulation, not necessarily for Lamborghinis and stuff, but to take care of my family. And I think at the heart of it, it's like changing the future for your family tree, so to speak. So if one person in the family tree, we'll use Rockefeller for fun, right? I don't know what their family was like before him. He changed their family tree completely. He took whatever he had and he made his empire. And pretty much, I would imagine every person who's come into the Rockefeller family after that has benefited from his work. That's not without knowing the details, but that's the kind of game that I'm looking at, which is, what is my legacy? What am I going to leave my children? What are their children going to receive because of my work and my study of finances? So hopefully I can have an impact well past just my days here on Earth. You also asked about long-term investor. Generally, yes. 70% yes. The other 30%, I would say, is more like swing trade, where you're looking for opportunities over the next 6 to 12 months where you can have a higher rate of return. Turtle Beach, since I was just talking about that, was supposed to be a swing trade for me, 6 months or less. I got in at a bad time. I watched it go down and I stayed with it because I believed in the company. I will likely be out at some point in 2020, ideally around $20. But there was no real plan to hold Turtle Beach indefinitely. But there was a big opportunity there, and it actually didn't materialize here just till recently. I will take those. Ideally, I'll take those profits and put some of it towards long term, like QQQ, FDN, IYC, the same stuff I talk about all the time. That's going to be my core long term. And then I'll look for some, maybe capitalize on one or two swing trades coming out of it. I hope that helps. All right. Zoom X-Boy, Nvidia, why does it keep getting rejected around 370? I read a lot about a target in a 405, 400 range. Fundamentally, it's up pretty high, right? So I love Nvidia. And in fact, I got a lot of, not really hate mail, but I got a lot of like poo-poo on my AMD stock review here recently. Whatever, passionate fans. But if you look at where Nvidia is just straight up year to date, it's up quite a bit, right? P/E ratio of 68 compared to where it has been in the past, that's pretty high. So you see this blue row. Last year in October, let's just go back even further. Last year in July, you could have got it at 31.89 from a trailing PE perspective. Now you're up to 68. A lot of things in the market are like this. So that could be a big part of the resistance. I'm going to look at tip ranks. I just did one on Nvidia. Oops. But I can't remember what the analysts were saying. They got 381. If you scroll down here to your point, Zoom X-Boy, here's your last couple analyst ratings. Yesterday, buy at 415. This one did not have a price. 2 days ago, 380. 8 days ago, 400. So I'm seeing the 400s that you're seeing. Typically, these are 12-month price targets. So I don't know if you're expecting it to go up to 400 the next day, but hang in there. I think that if you go by, these are all pretty nice analysts as far as their ranking in tip rank. So they're right with you at the 400. My guess is you're still going to have to wait a few months to get to that if I had to pick anything. Chips are down today. AMD, Nvidia, somebody else I was looking at that I can't think of right now. But 400's in there. The PE is pretty high right now compared to what it has been. That holds true across the entire market, I would say. But if you're looking for 400, my guess that is going to be a 10% uptick from today, right? If my math is correct. You could be looking at August to September, and ideally, you're going to get a couple good news headlines in there before you get to 400. But that's just my take. The one thing that's cool about Nvidia, if you're sort of a day trader or a swing trader, is like, man, does it have some serious volume to it? A lot of fluctuations. Today alone, today's a bad day. 5 days. 3.6. The low this week, 348. The high, 370. So you've had a trading range of 340 to 370 over the past 5 days. So there's some potential, but you're going to need another breakthrough. So anyway, hope that helps. And Lion coming in with the not Bleacher Report. You guys know what I'm talking about. The podcaster from someplace that I can't remember right now. Darn it, Barstool. Yeah, he's my role model. What I would say about that guy is he's entertaining, and I love that he doesn't back down. I love how everybody wants to put him under the microscope for, he didn't rip Warren Buffett. He's just making a joke that he's doing better than Warren Buffett this year. I found it entertaining. Obviously, we live in a very sensitive world these days, so it's like I don't even know what jokes are acceptable anymore. It's like no joke is acceptable. Excuse me, guys. All right, let's pick a random stock here. I'm just going to go to the front page. Let's see who's had some action today, since we don't have as many questions. Spotify. Spotify is interesting. They keep adding, particularly to their podcast. That's what I like about Spotify at a high level, not even talking stock fundamentals. They continue to add to their podcast portfolio. No one has done a really good job of building a podcast platform that you can monetize at scale. There's some companies that I believe are private, Midroll, and somebody else I'm thinking about. But you can see they just landed this DC Superheroes, which I don't particularly care too much. It doesn't affect me any. I don't listen to those. But I'll tell you what I like about those from a content standpoint is that they're evergreen. I'm imagining they're evergreen. So I'm picturing that they are comic books turned into podcasts, which is cool. And those shows can get replayed and replayed and replayed. It's perfect for monetization. Evergreen is awesome. If you want to see something really interesting, I forget when I read this, but the concept of a serial podcast, not the breakfast cereal, but the stories that continue on, right? Chapter 1, chapter 2, whatever. People, some of the best podcasters or most profitable podcast companies run on serial podcasts. They do like detective stories, romance. There's also some about what's the word I'm looking for? It's not like FBI. It's like unsolved mysteries, that kind of thing. Those podcasts, they pour their heart and soul into each and every chapter / episode, and it just keeps making money because it doesn't matter. It's not based on June 18th. It's based on a concept that sticks. Ironically, it's something that would also work very well on YouTube. Not necessarily for my channel because stock market changes too much, but la-di-da, I went down a rabbit hole there. The Superman, Looney Tunes, whatever the hell this is, I like it for its evergreen appeal. You also see a headline right here. Let's see what this says. Kim Kardashian are teaming up for a podcast exclusive to their source, right? So not the kind of thing I would listen to myself, but they are just banging it. They have Joe Rogan, which you probably heard about. So I like what Spotify is doing. They're getting away from the, not even getting away. They're not banking entirely on music, right? They're getting into other stuff. They're sort of doing a Netflix play. I really wanted to look at their stock, but I clicked away too many times. Let's see how the fundamentals look. See if this, obviously it ran up big today. So, yep. So on June 16th, we were at 185 plus $40 in 2 days, at least 2 days. So that's a little weird as far as times to get in. However, let's see, no profit yet. So it's going to be a little bit harder to get to all this stuff. Whenever a company is not profitable or it is a startup or whatever you want to call it, you don't get any PEs, right? So you have to start looking at different values to figure out what you think. That's why these startups and these IPOs that aren't profitable can get to such crazy numbers, right? Because there's really nothing to say. But price to sales is something that you can take as a metric. And as we look across Spotify, the current price to sales, which by the way, this does not include the run up. This is as of 6/14. So prior to the run up, price to sales wasn't too far off of what we've seen in the past. 12/31, you had a 3.93. Last June, you were at 4.21. So in the ballpark, not woefully overvalued from where it has been before. Price to book, which is really hard to do, except I would say that their price to book, which includes liquidation of assets, I would say that that number should be going down as they add more contracts with hosts, right? So they don't own Joe Rogan, but they own his rights. So the liquidation rights would probably help in here. It does look like price to book is it's a notch higher for sure from what we have seen. Let's just see if TipRanks did anything on the Spotify news yet from an analyst standpoint. Target price of 173. And the other thing that I'm looking at, which I've been spending a lot more time on in this whole Corona ordeal, is trying to let's get a feel for when the last price targets came in. The newest one is 21 days ago, so this is already pretty much outdated. You'd have to come in here maybe next week. The analysts will catch up to this news and choose their price. Analysts very rarely come out right away and put a price on something, and the reason is because of platforms like this that rank analysts, right? So you don't want to take, if you're a professional analyst and your reputation is at stake, you don't want to come screaming in with your price target as soon as Spotify issues news, because you want to see how it settles out. How does the news settle out? There was Kroger is an example today. Kroger is a grocery store. We have them here in Cincinnati. In fact, that's a Cincinnati company. They had a quarter of all quarters. And for whatever reason, their stock price went down. So bottom line on Spotify, you're okay to let the news catch up, in my opinion. That's a hell of a run up in the past 4 days. You probably missed the easy money. However, if you're interested in it and you believe in the company, more than likely on a run up that high, you can start picking away at it as it comes back down. Here's Kroger. Let me show you 5 days. This is their earnings report, which, oh, by the way, was awesome. And they're down $2. Is there a headline on this? Kroger's earnings surpasses estimates, increase year over year. Here's a good one from the street. Kroger tops estimates, but shares fall anyway. So, this is why analysts are so, they take their time getting out their price targets, right? They sort of cheat the system in some ways. Kroger reported income up 1.21 billion, up from 37 billion. Oh, we got two different metrics here. Revenue of 41 billion, up from 37 billion. Analysts were expecting $1.12 per share. They delivered $1.22 per share. But they're cranking out money, and for whatever reason, they took it down. It could be because one of the things I saw is Kroger's giving back to its employees in the form of raises and a one-time bonus. I think Target's doing the same thing. And so, the stock market hates it anytime you spend money on something like that that's for the greater good, because you're not sucking every nickel out of the company. So Target did that yesterday. I think they came out. They were at one. Let's see where they were. Yesterday was Wednesday. They were at 119. It's just a small decline, but they came out and said, hey, $15 an hour minimum wage plus some sort of bonus payment on top of that. And consequently, their stock went down because they're spending money out of the profit till, so to speak. But all right, check CNBC since we don't have that many questions today. See what they have going on. By the way, I mentioned quickly about Square. That's going to come out this weekend, my review of Square. Very interesting company. A lot of intriguing things. I'm still working through my opinion on it. My preview opinion, though, is I would still buy PayPal. And the big thing will be because I think PayPal is ingrained with bigger companies. And I think that small to medium businesses, this is a tough time. Square's doing awesome things. But in the short term, I think you're trying to get that stock a little bit cheaper. So that's an early preview. Let's see what we've got on top stocks and tip rank since we're here. Strong buys. It's going to be a ton of pharmaceuticals, just so you know. That's why I don't do that much. Let's go with bigger companies. So there's not a ton. And that's the market we're in. You got TG Therapeutics. I'm not endorsing this in any way, just to be clear, but they are getting a lot of strong buy ratings. Reata Pharmaceuticals, Iovance, Bio something, Guardian Health. Got to be careful with those. This is not the channel for health stocks, but wanted to see if anything intriguing popped up over there. Wyndham Destinations, potentially. That would be one I'd look at, only because, the whole sector's beaten down. Uber's in there. I don't like what they're doing here of late. They need to add more things to the business, not take things away, in my opinion. Alibaba. Anyway. Oh, we got a question from Ford Truckman, 1973. Shopify. Wildly overpriced from a fundamental standpoint. Cannot believe what Shopify has done this year. Absolutely cannot believe it. However, kudos to those who have been in. This is one I just got talking about how it's weird when you don't have a PE ratio. Here's year to date. So we got the dip, right? In and around March 20th. Everybody's scared. Things are coming back to life. And somewhere on June 15th, a big announcement must have come out, and it continues to go up now at 862. When I look at the stats, you have a market cap on 331.20. Granted, that was the depths of stuff. Let's go back to December. December 31st, market cap 46 billion. Today, essentially doubled, right? Crazy. Forward PE, December, it was 476.19. Today, 5,000. It's hard for me to get behind this. Price to sales today, 50. December 31. It's just tough. Price to book doubled. Everything's doubled, and it's just hard to feel good about it for a long-term investor. What I will say here is that Shopify has been running. It's in this group right now of people who are buying in under the, stay-at-home revolution, which is obviously happening. And as long as people buy this stock, it will keep going up. Let's look at a couple other things here. Revenue, 1.73 billion, 2.36 billion in cash, which is great. This debt is awesome. 141 million in cash. That's nothing when you have 2.3 billion in the bank. So that side of the thing is looking really good. I just can't believe the markup. Let's see what TipRank says. Not Spotify. It is Shopify, of course. Loading. Maybe. 687.61. Now that's the median target of all analysts. That's when we have to scroll down a little farther, right? So the past 16 days looks like, I don't know if I can't extend that column any. Guy from RBC, 5-star analyst, he's got $1,000 price on it. But prior to that, you've got an 843 and an 850, 805, 860. So a lot of eights, 1,000. We're at 861. It's got to be close to the high. It just went up again, even though no new money came in, right? So that's my take for Truckman. If you're interested in what I would consider to be better plays that give you the same amount of volatility and the same amount of run up, you could look at Nvidia, since we looked at that one earlier. That one's going to have, if you're trading or swing trading or day trading, I'd feel better about Nvidia for their technological advances. So that, that's my 2 cents. Doesn't mean that Nvidia, by the way, will beat Shopify. It's just if I chose between those two companies and I had to put my money where my mouth is, I would pick Nvidia for sure. All right. Pratik, didn't we do waste management last week? I think so. But let's look at it. Did it go up this week? No. Looks like it actually went down a notch. You're off of a recent high of 113. You're down to 104. P ratio of 26 is right in line with where it has sat since March of last year. Forward PE is a little bit higher. If you're talking about 5 years, then I don't think any investor would argue that the concept of waste disposal, pickup, all those things isn't going away. I believe this one should have a pretty nice dividend. Let me just check debt real quick. 13 billion in debt, 3 billion in cash, revenue of 15. So that's a big debt number, but they've got the revenue, I guess, to cover it. They should work on getting that down though. And forward dividend 2.06% as of today. So long term, yes, you have to ask yourself on waste management about the growth, right? You have to say in the era of FANG stocks, will waste management keep growing at the same pace as, let's just say, a Microsoft for fun? I'm not sure that would necessarily be true, but if you have all of FANG or you have enough technology and you're like, I got to get out of technology and into something else, waste management isn't going anywhere. It's just, I think it's going to be slow and steady. Let's look at the 5-year. So prior to Corona, if we were September of 15 to December 121, so it doubled up in maybe 4 years. So, slow and steady income. I would need a bigger dip. If it's at 105 today, it sure be nice to get it under 100, like what just happened. April. It may not go back under 100 then. Try to take a couple more bucks off just to feel better. Okay. Ford, difference between swing trading and day trading. Swing trades are designed to last for a short period of time, but they are not confined to the day, right? So basically 3 months, it would be an example, 2 weeks, 4 weeks, anything like that, where in my opinion, I consider long-term investing would be over a year. I guess you could do swing trading for less than a year, but you have some sort of insight or thesis that says, this stock is good in the short term. Let's see what Investopedia says. They always have really good definitions, by the way. Swing trade. Swing trading definition. Style of trading that attempts to capture short to medium-term gains in a stock over a period of a few days to several weeks. Swing traders use technical analysis to look for opportunities. They also may utilize fundamental analysis. So there you go. I was right, but they are better at talking about it. Hopefully that helps. All right. So quiet group today, but I was happy to jump on. I'm going to leave like 2 more minutes for any last second questions and then probably just wrap it up. see what's going to happen. Any changes to the charts? Not really. NASDAQ eked over. It's going to be interesting, if anything, on a broad scale heading into the summertime, and it looks like the tourist destinations are getting more and more traffic. It's going to be interesting to see what happens with the stock market because, between now and August 1st, if you're going to take a vacation, you probably are doing it. And typically in the summer, the stock market realizes significantly less volume. So you take out kind of volatility to a low point, and everything it doesn't necessarily mean everything stands still. But most of the big news, has probably come and gone. And the next wave would be in, August into September for so many things, not only from a financial standpoint with Q2 earnings, but you're also, of course, this year we're looking at the virus and what happens there. We're looking at sports. Will any sport play? I'm a big fan of the NFL, and we'll have to see what happens there. It looks like Major League Baseball and the NBA are targeting the end of July. We'll see if that ever happens. If those leagues were to put a date on the calendar and not deliver or, find problems with executing, I think it would be a huge drop in the stock market. So that's one thing that's going to be interesting, not because the NBA drives the stock market, right? But it says, okay, the NBA put their best foot forward. They got everybody in line. They moved them to Disney World. They got ready to play the games, and some medical thing came out and they couldn't play and they all went home. That's going to strike super fear into the market when it comes to everything else. So let's hope that as investors, whether you like sports or not, let's hope they get on the court. I don't know anything about soccer, but my understanding is that there is a really big soccer weekend ahead with the, excuse me if I don't know the right terminology, but the European leagues and whatnot are playing the Premier League, right? So I hope that they play for the sake of the rest of us who have money in the market. All right, couple more questions. Good price target for Disney. It just went down, didn't it? 117. Let's see the last month. Okay, so this is 30 days. Now, if you were really lucky, let's go to year to date, you could get in under 100 in the depths of Corona. 85. That's long-term invest. City, that's swing trade, day trade, anything at that price was awesome. And it slowly worked its way up. Then they announced that the parks were opening at some point. I think they are open now, but it has dropped from 127 on June 8th to another. It's dropped $10 or $15 since then. What would be my price target right now? I always, every price that shows up on the screen, I always say lower. That's the way my brain thinks. I would try to hold out, man. 112 on the 11th. Now you're under, so that's under 115. You could also target 105. Just because those two events have happened here recently. So let's just call it an even under 115. But if you're holding for 5 years, like you probably should on Disney till park revenue recovers, then what's the difference between 117 and 112, right? You could also try to do the old buy 20 shares at a time. Just like you're at 117 today, get 20 shares. Wait to see what happens, buy another 20 shares. And if you're holding it for 5 years, you'll be fine. Nobody's going to argue Disney. At least I certainly am not. what's going on with U1? I don't know, because I don't even know what that is. Urban One. You're going to have to help me here. Communication services, urban-orientated multimedia company in the United States. Trying to see, targets African-American urban listeners, which is great. I'm trying to see what they do or what their shows are. Ricky Smiley Morning Show, Russ Parr Morning Show, D.L. Hewley Show, and also has a website or two. And you asked what is going on over the past month. Wow. Interesting. So hovering at $2, crushing it, spiked to 34, dropped to 12, hit 32. Huge gains in cover. I don't know. Heavy volume. I'd have to get, I'm not going to bore everybody and go through this first quarter results from 21 days ago. 21 days ago would have been in May. And this pop has happened since May. So even if it was awesome. Good question, man. That is interesting. Bloomberg is suggesting 2 companies that serve Black and underrepresented communities more than doubled on Wednesdays as traders aid trends associated with supporting Black-owned business amidst global protests. The stocks have also seen increased interest from retail investors. Urban One's Class A and D shares were 2 stocks with the biggest increase in popularity in Robinhood accounts. So buying Black coupled with similar phrases such as buying back the block are garnering mainstream attention. So it's a movement. It's a movement is all, this is me doing 2 seconds of research, but if you get everybody on Robinhood, who, younger generation, passionate fan base, if you get them in, it looks like their volume just pushed it. Crazy. Great call out there. I was not aware that was going on. All right, last couple questions. Do you think DGLY will benefit from potential passing on the bill? Police reform. I don't know the company off the top of my head. Digital Ally. Let me read about them real quick. Sells digital video imaging and storage products for law enforcement. Okay, I'm going to assume video recording storage, in-car video recorder, hands-free body-worn cameras. Yeah. That's not a bad theory. I would imagine that recording, although it's interesting, it dropped. Look at this 5 days. I mean, it's not a big stock to begin with, but it has dropped. So there's a little bit. Prior to the unrest, you're at 80 cents. During the unrest, spiked to $6, slowly unwinding to $3.95. I would be a little concerned that you've missed the boat on this. How long? You've been anywhere, it's been declining. This is 1 year chart. $1.45, June of 19. 0.8 or 80 cents in May, and then the jump. I would need to go, what I would suggest is to go into investor relations for their site and try to figure out if they're booking contracts, because I think the theory is good. And I understand where you're coming from, 110%, is what we think happening. And I think that's the biggest miss in stock market analysis today, is a lot of people think something is happening, but it's not. I just did this on AMD with the sort of haters when I was saying like, hey, they're pretty pigeonholed into computers, laptops that appeal mostly to video gamers. and people were coming at it with like, no, they do all this database and all this other shit. That's what they're saying. But if you go to the investor results, like everything that they sold last quarter was computers and processing. Custom enterprise projects, zero, basically $0. So that's my 2 cents. This is a good theory from Zoom X-Boy. You need to make sure they're booking contracts before you buy in at this price. CTCA Lion, is this going to be like a Canadian stock? Will I even be able to get to it? CTCA, Canadian Tire. I don't know anything about these guys, except the only thing I do see is 3.7% dividend as of today. PE has come down. Looks like they crashed, right? And then P's come way down. Forward PE struggling, but that could just be because tire sales are probably going to take a while to ramp up. Why not? You were at a long stretch in the 140s plus. Long stretch in 140s. So without knowing anything about the tire market, it looks like you still have a discount. I'm guessing, like everything else in the world, it's probably 2 years to get back to normal business operations. You may get lucky here on the concept of people investing more in used cars than new cars because they're cheaper. And of course, if you have a used car, you are going to need tires at some point. Volvo B. I don't even know if I don't in cars. Cars are really weird right now. Volvo B. Let me just try Volvo. Now, I don't know if you're perhaps from it. Unless this is it. This is public. Trucks. Does look like this is it. I don't know how to invest in this myself from my desk because it's in Stockholm. And just eyeball here real quick. You've been on a run up since May 14th, 116 all the way to today at 147. Anytime I see that as an investor on any stock, I'm concerned that I've missed the boat. So hopefully that helps. Also, cars are really weird right now. I talked about the tires with used cars. Used cars are hot, super hot right now, and it makes me worry about everybody selling new cars. So that's my 2 cents. David, I keep reading about Nikolai being the next Tesla. Others say it's a fraud. I'm in the fraud camp. And the only reason why gets back to what I just said 15 minutes ago about show me the numbers. And they have no numbers, right? And so I can't, it might end up being good. The dream is good. Attacking transport, the dream is good. The balance sheet, the sales numbers are non-existent, so I can't get in. Plus, it's a run up. Like, not only is it have nothing to its name except a dream, but here's your last month. 35.91 on June 5th. Peaked at $88. Now you're at 65 and basically flatlining at 65. I don't know, man. It's just really hard to, there's too many companies out there that you can see exactly what they're doing, right? You don't have to wonder, like, is Walmart making money? You can see it every day. Even Tesla to some extent. Whoa, sorry guys, I eliminated my window here. I'm going to do the last ones. Just give me a second to set this up again. La-di-da. Did that come back on? Just stream, remove. Almost there. There we go. This is the way you do it on Nikola. Total credit to ZoomX Boy. You have a large order interest from Anheuser. I got you for their trucking fleet. So you, my friend, are hitting the nail on the head because somehow you got that information that money and contracts are happening. I think that's huge. I'd still like to see something rolling on the street, but I'm with you. If you found that and you're just flipping it, I'm all about it. But don't actually start building until at least next year. So good call. But kudos to you if you made money on that run up. That's awesome. Genius Brands. I think this one came up last week, but I'm going to look at it again because it actually came across an article or something came across about it in my regular reading. So something happened here where you hit $10 on June 4th. Now you're at 2.8 for the year. You know, this is nickel and dime city. And then on May 8th, some sort of news came out and pump and dump, right, set to $8. You're on the wrong side of the hill, in my opinion, unless you're a short seller, which I can't advise you on. Here's Motley Fool. Why did Genius drop today? Free ad-supported cartoon channel went live on June 15th. There you go. Unprecedented distribution. However, judging by the nearly 15% plunge of stock, investors were unimpressed. Now what? Genius says it intends to produce and acquire original animated family films to further strengthen its lineup. Promising comedy adventure series. So here's the thing on this one. It came online or announced it's coming online and jumped. I'm a little worried, to Motley Fool's point, of what did people think of the end product, because if it did go live on the 15th, which was what, Monday, something, you're at 452 on launch day. Now you're at 281. A little scary. And I'll tell you something about show brands. And if you think about movies, the difference between the movie that stars Wolverine or Superman and the off-brand version of Wolverine and Superman is crazy, right? And that's that brand recognition. That's the ability to merchandise at a successful scale. And so inventing new shows has never been the problem for Hollywood, for Netflix. Inventing new shows is not hard. Making those shows stick is the hard one. And developing a viewership that is passionate enough to pay for and continue paying for your content. That's where it gets difficult. So in my book, Genius, eyeballing it here, show me that there was an Arnold Schwarzenegger thing, whatever this was, superhero kindergarten. Theoretically, maybe. And it's also done by Stan Lee. That's interesting. However, show me that kids like it. Let me get my 6-year-old in the room, put it on the TV, and when it's done, I'm going to ask him if he wants to watch it again, or does he want to watch Johnny Test, which is his new favorite on Netflix. Which isn't even a new show, by the way. All right, guys. Hope that helps. I'm going to stop it here, but I really do appreciate everybody coming out, and look for my Square analysis that's coming out here in a few days. I'm going to record it tomorrow and get it on the board. So hope everybody has a good weekend, and we'll see you soon.